Alright guys, so as you asked for it, I'm gonna here make a small video where I do some technical analysis on the SPY, which is the ETF tracker of the S&P 500. I'm gonna analyze the whole move starting in after the 2008 crisis in March 2009, going until, let's see for how long, but definitely we are not done here for this move. So I'm gonna use mostly Elliott wave theory, but I'm also gonna use some fibs to find my targets, and I'm also gonna use, of course, trend lines. So let's get into it. So the first wave, so I'm doing it with you guys. I've done that before, of course. So I know a bit what I'm doing, but I forgot exactly what I did. So let's see if I find something similar or not. This is for me pretty clear. So each time you do this kind of analysis, let's start on the weekly, guys, so we see more clearly what is happening here. My internet is a bit slow in the hotel, so I'm sorry for the lagging. So here we go. We have it. So 1, 2, 3, 4, 5. So I know this is a 4 because I have already analyzed this move before, guys, but here, of course, there was a question. A lot of people thought the fifth wave was actually going here, that we got something like this, you know, and that the COVID crisis was the beginning of a new move down. I was thinking like this as well at this time, but here I knew quite early that this scenario was not the correct one. So now my analysis is like this. I'm very convinced that this is what we are having. To know that your counting is correct, guys, you need to find always 5 waves in each motive wave, all right? So we're doing it. 1, 2, you see even here to know where the first is going, 1, 2, 3, 4, 5. So first is going here, 1, 2, 3, 4, 5. Okay, second, 3, 4, 5. And even in this one, okay, here it doesn't really matter. We could have something like this. I'm not going to go to this level of detail. I'm going to keep it like this. Then we're having our small ABCs as usual, guys. So here we had a zigzag. So we expect a flat here. It's not a flat, it's a It's definitely not a flat. The 3 goes here actually, guys. Okay, it's more something like this. Alright. And here we had this megaphone pattern that I was analyzing with you guys. Very nice. Let's put it in pink. Okay, so this is a triangle, guys, nothing more than a triangle, all right? You can see A, B, C, D, E, all right? So this is a beautiful triangle that occurred in the fourth wave. So, you know, triangles very often occur in fourth waves. So sometimes you're gonna have zigzag and flat, sometimes flat and zigzag, and sometimes zigzag and triangle, or flat and triangles. Basically, you often have triangles in the fourth wave. So this is a very interesting situation because I don't see often those expanding triangles. But here, I was very sure that this was actually bullish when we had, so let me go back on the daily. Now I'm going to analyze the fifth wave, all right? Because we are in the fifth wave, and then I'm going to give you targets. So I've done already this in the video I sent you before, so this is still holding, but then I guess you guys are interested to get maybe some information about what is happening in this move, so I'm going to come to this as well. So now let's analyze this whole move up. So here, same thing, guys. We are going to use Elliott to find what is happening. So this is a 1. Okay, we're having something like this. So there is a fourth wave that is going to come, guys. I don't know when, but it's coming. It will come. This would be a very nice buying opportunity. I think probably it's going to rebound on this trend line again. Okay, you see here. So I'm connecting this high with this high, and you can see here rejected, rejected, rejected. We break it. It was a bit messy, but then we had 1, 2, 3, 4 reactions. And I remember, guys, the whole way up I was saying that here it's a very nice levels to buy, because I know we are in this third wave. So now let's analyze this third wave, so we're going to get more information. Definitely it's going to be longer. I mean, not definitely, we don't know yet. Okay, so 1, we start with a flat, you can see this time. Okay, so we haven't finished. Okay, so we have time, guys, we have time. For me, we have time. So here we have a flat, so we expect a zigzag or a triangle. In the fourth wave, of this third. So first let's see this one. This one is not obvious, guys. Okay, I'm not so sure about discounting, so I don't really know where the third wave is gonna go, but let's try to find some targets, and then we're gonna try to find some levels below which that are telling us that the third is down. We're gonna use fibs, we're gonna use divergences, guys. I'm coming to it very soon. So for now, let's try maybe to find some targets. So let's use fibs right away. Up. So you see first wave is here, so a typical third wave would go to the 470 area, so exactly where I put it, you see. So I start to be used to that, guys. So yeah, the typical third wave would go to the 470 area. So here we're gonna probably have some selling pressure, I would say. Okay, so let me put this like this. All right, let me get rid of that. Here we're probably gonna find some selling pressure at 470, guys, and then correction. So then the correction would go as usual to the top of the third or bottom of the fourth. So it would go, guys, to this kind of levels. All right. So the 400 level would be a nice level to buy to play the fifth of the third here, and then this fourth wave would probably not go much lower. So I would say if you guys want to enter the S&P 500 trade with the SPY that I'm having here, that is just 10 times less, I can see that fourth waves most likely they would come to the 400 level, even maybe less here, maybe we would only go here. So I would say right now that the 400 level is an amazing level to buy, guys. Okay, so 5-6%, 7% lower is a very nice level to buy. Of course, you can use a stop loss around this area, guys, just below the purple trend line here. That is an upward sloping trend line that is actually making a very nice stop loss. So maybe buy 400, stop loss 390. You know, because you never know, this is the COVID crisis that it's still going on. You never know when they're gonna, you know, stop injecting liquidity in this market, because this is the main reason, guys, the market is going higher. Of course, the economy is doing better because we have this massive liquidity injections, and the inflation is gonna be most likely handled. Even if we go slightly above 2, you know, to 3%, they're not gonna start increase rates. That's what Powell said, I think 1 month ago. I'm not following very closely what is the policy of the Fed right now, but I'm pretty sure it has not changed. It will not change, guys. So as long as we have some kind of problems, the money injection would keep happening and the market would keep going higher. So for me, we need to have new information for this market to revert. For now, the COVID crisis will not make it revert. I don't believe it. Once again, the issues could come from too high inflation, something like this, you know. But to me, we are far from it. For now, I'm very bullish on this market. Let's see, for example, here, what are the divergences telling us. So let's zoom in a little bit. Okay, so we completed this fourth wave. So here, what is the MACD doing? Only going higher. I'm looking for bullish hidden divergences. You see, for example, here we're having some market going higher, MACD going lower. So you can see the S&P is very strong. Here it was giving us some hints about its bullish development, the market making new highs when the MACD is making lower lows. New lows, sorry, when the MACD is making lower lows. Let me go to the 4 hours. I want to see if this third wave is done soon. I have a 470 target for this third wave. Here the MACD is same going higher, so I'm not having those divergences on the 4 hours. I'm looking for bearish regular divergences as well, you know, market making new high with the MACD going lower, but it's not the case here. You can see the MACD is going higher, so we are good. Here, for example, we had some, you can see up between here and here, the market making new highs, and no, the MACD was making new highs, so it was not a divergence. Okay, guys, so I don't want to make it too long. Let me just give you my target for the fifth wave for the very long term. So I'm going to do the usual stuff, guys. I'm going to measure the 3 first waves, okay, from here to here, and I'm going to apply it to the bottom of the fourth, guys. All right, and this is giving me different scenarios. So I just do it with the third wave. I can do it with the third wave like I did in my old video, or I can do it from here. Actually, I prefer to do it from here, and it's going to give me slightly different ratios, but I prefer those. So this is giving me, for an extended fifth, a target of 5,900. So this is a different method from the one I used in my previous video. I just measure here the whole move up, which is actually another technique that I like to use, or I can measure just this one. And then in my first video, I give you the 1.618 or the 2.618, which was the 7,200. I think it's a bit too much as a target, so I revised my target. I use another method. and I give you 5,900 for 2024, something like this. So that's it for me. I hope you guys enjoyed this update on the SPY. See you. Cheers.